and welcome to the first panel this afternoon. Really privileged to have great panelists on this panel. Dan Morgan, who's the Head of Regulatory Relationships at Ripple. Ben Mason, who's the Joint CEO of Compliancy Services. Anna Wallace, who is the Innovate Head of Department at the FCA. Donna Parisi, who's the Global Head at the Finance Business Unit at Sherman & Sterling. And Clara Chu, who's the Director of Licensing and Head of the FinTech Unit at the Securities and Futures Commission of Hong Kong. So really interesting international panel here today to share their perspectives on crypto assets and whether to regulate them or not. So I'll open the panel. I'll give the panelists a chance to introduce themselves and give an overview of their role and how they interact with crypto assets in their day job. So if I start with you, Ben.
Thank you. So, yeah, I'm Ben Mason. I'm the Joint CEO of Compliancy Services. Our role really is as professional advisors into the industry. So we advise firms generally that are either regulated by the FCA and the PRA in the UK, or very often in this case would like to be regulated by the FCA and the PRA. So our angle is really helping those people navigate what can be quite a tricky journey through to authorization. And of course, the angle from this particular forum, I guess, is an awful lot of firms are in crypto. Many of them would like to be regulated, but of course cannot be at this particular time. So the advice we give really is taking people through the journey and helping orientate them. And the key message generally is just get your plan together in advance, because when you go and meet Anna...
very friendly face, obviously.
Well, Anna's very friendly face, but you may not qualify for the Innovation Hub or the Sandbox. You may just have a normal application to make. And if you do, then it's really important that you understand the implications of your business model and what you want to do. So that's our angle.
Anna?
Hi, I'm Anna Wallace. I head up Innovate at the Financial Conduct Authority. I guess part of what we do in terms of innovation is try to disrupt Ben's business, so people don't need to go to him for as much advice. But
we're still busy.
I'm sure it's very good value for money, Ben. I mean, I guess what we're looking to do is encourage innovation in the interests of consumers, and that last part is really pivotal for us, because we want to make sure that that innovation really delivers benefit both to the people who use it, the society more broadly, but also users of financial services, and we really think we can play a pivotal role as a regulator in doing that. You know, I think it's pretty obvious why crypto is part of my day-to-day business. Really, I think from the early days of Innovate, you know, we've been doing this for over 4 years. Crypto is something that's been touching our desk the whole time. Started off with cryptocurrencies, digital currencies, then it was blockchain, now it's crypto assets, ICOs, stable coins. And we're really practical. We're trying to kind of meet the businesses, understand what's going on. But as you know, these businesses mature, also we're having to mature as well and think about what a stable regime looks like for crypto assets.
Dan.
Hi, I'm the Head of Regulatory Relations at Ripple. Ripple is a technology firm that's trying to remove the friction from cross-border payments, so often confused with the cryptocurrency itself, but actually we sell technology to financial services providers, banks, payment providers, etc. So my job involves speaking to people like Anna, central banks, global standard setting bodies, on an advocacy basis around trying to create certainty for digital assets, to try and encourage our customers to adopt this technology. You know, when it comes to, you know, taking on a digital asset or holding a digital asset or using new technology to fulfill a cross-border payment, you know, a bank needs a certain amount of legal certainty, even though the technology may today lower the cost, increase the speed of cross-border remittance, as the FCA's recent crypto assets perimeter guidance report states in their sandbox trials, not ourselves, but other similar models. They may still be reluctant to use the technology and invest in digital assets, given the legal and regulatory vacuum that exists in many places today. So you know, our job is to try and encourage that, to encourage adoption for our customers.
Hi, I'm Donna Parisi. I'm Head of Financial Services and FinTech at Sherman & Sterling, a global law firm with offices in 18 countries. So our clients span the entire FinTech ecosystem, from corporate enterprises, venture capital firms, entrepreneurs, and startups. And my job is to help them navigate what's really the alphabet soup of global regulation within the United States and globally. Some of the use cases and businesses that I've been involved in include tokenization, fractionalization of interests, in a variety of asset classes, all driving towards providing secondary market liquidity. Interestingly enough, I've spent some time working with crypto assets and trading. So for those of you from the financial services space, you may be familiar with what's called the ISDA Master Agreement, and is the standard agreement for the trading of derivatives. So I've been working with a number of financial institution and sort of fintech ecosystem firms on derivatives trading of crypto assets and the unique issues that raises.
Hi, I'm Cloud Chiu from Hong Kong Securities Futures Commission. I'm the director of licensing department there, and also I'm the head of fintech at the commission. My main job is I oversee the fintech contact point of the commission. For fintech contact point is like a portal that public can send inquiries in relation to the fintech business in Hong Kong to us and ask us whether they need any approval or license in Hong Kong. And we meet the industry from time to time and closely work with the industry. And at the same time, I do a lot of policy work, like in Hong Kong, we had a potential regulatory framework for crypto trading platform in November last year. So we are also creating all these new regulatory and legal framework in Hong Kong.
Excellent. So we've got an amazing panel with diverse kind of views on crypto assets. Quick show of hands from the audience. How many of you think crypto assets should be regulated? If it's a yes, hands up, please. Ooh, interesting. Hands up if it's a no. Oh, that's an even more interesting show of hands. Let me pose a question back to you. And I know Dan, you touched on the regulatory vacuum in some instances. So open question, should it be regulated, yes or no?
So I think that's really simple. If you look at what crypto assets do, they allow you to move some value around. They allow you to raise capital. They allow you to speculate. Those activities are regulated, okay? Until somebody invented something new that didn't cover those activities. If you look at the risks they pose risks to consumers investing, they pose risks to market integrity, there might be a long-term systemic risk, and they pose financial crime risks. Well, we've got some regulators who are actually there to address those things. So I think it's really simple, and you look at the opinions, the EBA, ESMA, the Treasury Select Committee, and everybody, I think the view is these things need regulating.
Yes. Anna?
I think they do need regulation. I think the interesting question is how and when.
I agree.
And that is the question that we're all posed with challenge. There is the question of just blanket regulating in the way that we've regulated any other asset in the past. And I think actually regulators are being quite thoughtful in this space and actually thinking, is that an appropriate approach? With regulation comes cost for industry. That can stifle innovation. It needs to be proportionate to the risks that it poses, and those risks are quite different actually in different countries. We find that the way people interact with these types of assets is quite cultural actually. Yeah. And then the question is it for financial regulators? Ben spoke about speculation. Well, not all speculation is financial. Yes. People buy all sorts of things to speculate for value. So the question is the tools available to financial regulators the right kind of tools to help ensure that legitimate businesses can thrive in the UK? And so I think there's quite a lot of thoughtfulness on that matter. And then I think the last question is, do you regulate alone? I think for us in the FCA, we want to be collaborative, we want to be internationalist. And from that perspective, having that thoughtful conversation at a global level is quite important as well. So it's a kind of complex set of questions.
It is indeed. I mean, the scope and the sector piece, I think, is particularly challenging, isn't it? If you go at it alone, it's just a little bit harder to get that harmonization. Dan?
Yeah, absolutely. And I think as well it's important to emphasize that it's a very broad church, this area, and we should really continue to try and focus on activity-based regulation. So if you're conducting a cross-border transaction, then this would be regulated in a different way than say, I don't know, securities trading or other payment type institution regulation. So, it's almost like replicating financial services again in a different format. So there's going to be different approaches for different activities. try and maintain that technology neutral approach. And often a lot of the risks are not new. Maybe the ways in which they are mitigated would be different. They might present new challenges, whether that's something like custody, given that they're bearer assets, and maybe some of the rules around clearing and settlement, and maybe looking at how new financial market infrastructure is going to be different in this new world, and new institutions have new requirements. So it's much more of a broader view than just to regulate or not to regulate, because there's lots of different areas as well. Having said that, though, there are some core principles that we're seeing develop, obviously being led by global standard setting bodies which are looking at core areas such as AML, and we can see that in most jurisdictions now being applied to the on and off ramps for fiat currency, which looks sensible, as well as more thoughtful approaches as well around things like how do banks interact with them, and from a prudential sense. So there's lots of elements to encounter, I think, to understand that each activity is actually probably going to be slightly different than the other, but ultimately themselves, there are places where you have to try and define them within law and understand what the regulatory principles are. Otherwise, it's difficult to interact with them.
Indeed. Donna?
So the answer, I think, is yes. And I would say that most of my clients, while they might prefer lighter regulation more than heavier regulation, they do want regulation, because regulation promotes confidence in the system, right? It helps the system remain safe and stable. What they really clamor for is certainty. They want regulatory certainty. They say, tell me the rules, that way I can figure out how I can navigate them for my business and achieve my goals. So that's the overarching sort of theme that I hear over and over again, which is just tell me what I need to do. And I think from a regulator perspective, we have to sort of look at their incentives, right? Which is you have to balance the need for innovation, right? For promoting business in your jurisdiction, against the stifling of innovation and the fear of being wrong, right? Because there are bad actors in any sector. And so I think the challenge for the regulators is to find that middle ground, that sweet spot between promoting responsible innovation while protecting the financial system.
Clara?
Yeah, I believe many financial regulators have spent a lot of time deliberating whether crypto activities should be regulated or not. But I guess it's not really a choice from regulators, because crypto activities in fact have already thrown into the area of securities industry, and you can see there are many and increasing trend of more crypto-related financial products like crypto funds or crypto futures in Hong Kong, and also STOs, all these kind of activities, in fact, fall squarely into the regulation of financial regulators from time to time. And also you see, even though we always say there is still not very solid, concrete international consensus on this, but I think from G20 or FedF or the documents they recently published, that regulation on crypto is kind of, we were going to regulate it, especially from AML perspective. So I guess the question is more like how we are going to regulate it, or to what extent we are going to regulate it.
Yeah. And just staying with that point, I mean, Hong Kong has this very interesting opt-in system. Can you tell us a little bit more about that?
Oh, sure. What happened is, in Hong Kong, we have a potential regulatory framework for crypto trading platforms. In that sense, we firstly, we originally consider whether we can just apply the existing security law on, regulating these crypto trading platforms. But we then find the outcome may be a little bit strange, because, for example, if an investor trades some cryptos on our trading platforms, and then if the investor invests in some Bitcoins and then some ICO coins, and if there is any problem and he comes to us, and then we say, no, we can only handle your disputes or your complaints in relation to ICO tokens because they are securities. They're regulated by us, but in relation to your trading on Bitcoins, they are not securities, so they are not regulated by us. Then the investor, from investor perspective, he may be very confused as to what is regulated by you and why.
Yes.
Even though from regulators' perspective, I think is quite clear, but it may not be satisfactory. So what we have come out is we have a potential regulatory framework and with some novel features. And then what we say is, if you are running a crypto trading platform, crypto exchange, then you can opt in or opt out from our licensing system. What that means is, if you don't want to be regulated by us, then you don't come to get our license. You just need to continue your business, do your whatever you like, trade, but on your trading platform, you can only trade non-security tokens. Then it would be totally out of our jurisdiction.
Yeah.
Okay, so you can opt out from us. But if you want to get a license to be regulated by us for commercial reasons, for whatever reasons, then you can at least trade one security tokens on your platform so that you can fall within our jurisdiction. And we have the power then grant you a license. Of course, that's our discussion whether we are going to grant you that one. And at the same time, we also say that if you want to get a license, you trade one security token, but you also have to voluntarily submit your business, your business to the jurisdiction, to the SFC, the whole business. What it means is that you have, even if on your platform you are trading some non-security token, you cannot argue with us in the future saying, they are non-security, so it's not under your regulation. So what we ask for is now, when we grant you a license, you have to agree that you voluntarily submit all your business activities jurisdiction to us so that the SFC can regulate both security or non-security token, all trading business activities on your trading platform. It will be regulated by us. So that is our potential regulatory framework. And the novelty, in that is we have this kind of opt-in elements, and then secondly is we don't, if an exchange want to be regulated by us, then we won't further classify those tokens whether they're security or non-security, because we will say that every trading transactions is regulated by us.
It's interesting. So Anna, coming to you, the FCA's position, the regulatory perimeter consultation paper set out the kind of bare bones of your approach.
Yeah.
You touched on an interesting point around how retail investors or the retail market is different from the capital market. Can you give the audience a bit of a flavor in terms of the regulatory thinking around that and some of the easy bits and the difficult bits when you think about those two markets separately?
Yeah, I think we are very mindful of the impact of regulation, not just on the firms in terms of the cost of being authorised, but also what that means in terms of their acceptance into the wider financial system, and what that means in terms of how consumers interact with it. So one of the things we wanted to look at was actually, what do consumers think they're getting involved with when they get involved with these exchange tokens? Because there are these, we don't regulate them at the moment, so we don't have the figures. And it's interesting, in the years I've been doing it, the level of uptake in different jurisdictions has been completely different. And Korea, people have been investing huge swathes of their portfolio there, but in the UK, it seemed to us anyway that people were significantly more cautious. So we did a bit of research with consumers in the last couple of months just to kind of give us a bit of a better understanding. And actually, most people that we surveyed, well, the vast majority of people barely know what this is. I know this audience are not a representative sample of that. We found out about only 3% probably, invested any money. Of those, half of them probably only invested under £200. And most of them really thought that this was just,
Scam.
it was just a gamble, frankly. It was money that they could lose out. One of the stories, did it get into the publication, was he would have just spent it on weed anyway. So, the serious point is about this. What's the impact of regulation? Well, the impact of regulation is it gives it a seal of approval. It basically says, this is a financial instrument, and and it's regulated by the FCA. And actually, if we're not seeing the harms, I'm not saying there aren't harms there, because there are, and we are very worried, like the SFC, about people being confused about what's regulated and what's not. But for us, it kind of gave us pause for thought, actually, and particularly when this is a space, particularly in the exchange token, where a lot of experimentation's happening, you know, a lot of the potential of this technology is being explored. But we don't necessarily think retail consumers are the right people to be testing on, right? So when it comes to things like financial instruments like derivatives, you know, we just don't think they're appropriate. You know, we think, you know, in terms of potential for market manipulation, the, you know, opacity of price formation, we just don't think retail consumers buying on top of that a derivative is appropriate. So we are taking really strong action where we actually think consumers do need to be protected. But on the exchange token side of things, you know, we've actually had some pause for thought for that. But we use the sandbox to look at these business models and to look at the potential of the business models as well. And ultimately, we are actively thinking about how we might, you know, interact with this market, and the Treasury have, you know, ultimately the pen on it. But I think it's important to really understand what's happening out there and, you know, how consumers are genuinely interacting with it.
Did this survey, sorry to interrupt,
Yeah,
wonder with the survey or we work with the sandbox, uncovered any sort of latent demand or maybe blockers to institutions become more exposed to exchange tokens or other type digital assets? Because I mean, from our perspective, from what we see more broadly, is that a lack of certainty, a lack of regulation is actually holding back further use cases. So you read sometimes that you haven't seen much utility in the market through this, and obviously we'd argue that if there was more regulatory certainty and a sort of allowance for institutions, then they would develop rather than purely on the retail speculation.
Yeah, and I think that's, you know, Suchitra was kind of pointing to that in her question, which is, you know, how you treat the retail offering and how you treat the capital market side of things can be quite different, right?
Indeed,
And I think the sandbox has been a really good place for, you know, kind of day one, it was your small fintechs just playing about. You know, now you've got global banks trialing with those startups who were in the first cohort. So for us, a really kind of hands-on approach to understanding the implications of it. And you're absolutely right. You know, questions like custody, you know, are questions that we need to think through in terms of the business models. And we found, you know, in the evaluation work that we did, that actually having the sandbox and having an environment where partnerships can work, or where the regulator can, in a safe space, say, you know, actually, look, there do seem to be some benefits of this, has seemed to support the broader market in becoming engaged. But, you know, the perimeter guidance was a big part for us in giving some greater clarity to the market so firms understood. Because, you know, let's be honest, if I'm an entrepreneur, I don't design my business around MiFID II. I mean, I don't know if maybe you do. But, you know, people build businesses because they have creative ideas or because they see an opportunity. For us, helping them understand why regulation affects their business in the way they do is really important. But I think, you know, us and the Treasury have said there probably is more to do in terms of clarifying that and thinking about things like utility tokens and the regulation of those.
I'm going to come to you in a minute just to talk about the receiving end of this regulation, how it fails, Ben. Dan. But Ben, you wanted to...
Yeah, so I'm going to give a contradictory view, Anna, which is, so I think regulators are pretty cautious people for some very good reasons. And having dealt with lots of them over the years, then I understand why, you know, they're put in the headlights and we have to sort of say, yeah, whatever they do wrong, then that's scrutinised. I think Dan's point about regulatory certainty, though, is critical. I had a chat with a guy on the Malta stand in the exhibition hall a moment ago. He told me they've got 2,500 firms that have expressed interest in their DLT and crypto initiative. So I feel quite strongly that, so I thought it was a really good consultation, but it's disappointing that 16, 17, 18 countries have consulted already and given guidance. And if we had the foresight in the UK to go back a year or two and to put something in place, broadly retrofitting what we've already got, because I think a lot of the activities, I'm with you, activities-based, we've got payments-based activities, EMIs, all that sort of stuff, and we've got capital markets. A lot of the activities we already regulate, I suspect that would have done a huge amount for UK PLC. And looking forward, you know, capital markets might, over the next 5 or 10 years, completely change the whole model it may happen on the back of DLT. It would have been great if the UK had been there first. And at the moment, it feels to me like we're a long way behind. And we just heard the Chancellor saying how much he's doing, which I kind of agree, except in this area. Regulatory certainty would be really good for mainstream crypto entrepreneurs.
So, at the receiving end of it, Dan, maybe touching on that point in terms of if the regulators had put out something 12 months ago, would that have helped or hindered while business models were evolving and reshaping? But more generally, being at the receiving end or having to work with regulation across multiple jurisdictions, what are the risks and opportunities and challenges?
I think we're in a period where it's definitely improving. Everyone's leaning in and looking at this space now.
Yeah.
And you can see the examples all over from the UK and France and the European Union and other markets around the world are all very much looking at this space. I do feel there's still a trend to try and keep crypto or digital assets separate from financial services as a whole, and a quite contained bucket where we protect consumers to a certain extent. But the wanting to, I think there was the speech, the ESMA chair after the paper said, we could apply more payment type regulations to these exchanges beyond just pure AML, but that would give it legitimacy and encourage further use. And I think that said a lot, that there's still a view, and I think the EBA said the same in 2014, that this is all great, but let's keep it out of credit institutions, let's keep it out of financial services. And that's, you can see that beyond the sort of cheerleading view of maybe some governments and jurisdictions, that actually I think there's still a case to be made to try and encourage that further adoption. But as I said, that on the other hand, things are improving, and there's more and more certainty in the market, as we can see, and the FCA is in the process of providing that now. I mean, we see broadly, I think we discussed it in the roundtable yesterday, 3 views if we would try and break it down, whereas the US is looking to try and not change the rules, but retrofit this in through enforcement and guidance, and that leads to some certain outcomes. And then we've sort of got a new framework with new asset classes being defined, and you see quite a lot of that in Asia, where it's starting from and some markets in the Middle East as well, where it's a whole new framework that's been written from scratch, and then more of a hybrid approach where it's certain amounts of clarification for the perimeter with new elements added to it and new definitions around, again, payment tokens or utility tokens, so UK and Switzerland and things like that. So I think there's some similarity, and what's happening at a standard setting body level will iron that out, I think, more broadly over the next few years. But we work with our customers. We're not a regulated entity ourselves. So in some respects, it's more of the advocacy side, where it's not the receiving end. We're in the conversations, and we're seeing it develop. And I've been at Ripple nearly 12 months, and it seems to be getting more positive, but there's still a long way to go.
So Donna, how are from your client interactions and conversations, what's the impact of regulation been in the US? I know it's been quite a hard line.
In the US, as I alluded to, one of our issues is that we have a number of regulators that have jurisdiction over different segments of the market and some overlapping jurisdiction. So that can be very frustrating for people entering the US markets. I wanted to touch on a couple of points that came up, which is, I think an undercurrent of this, in addition to regulatory certainty, is regulatory harmonization when we're talking about a cross-border system. And I think that we have a long way to go to achieve that. We haven't achieved cross-border harmonization in our traditional financial service model. So I wanted to point that out. I did want to put a plug in for the regulatory sandboxes like the FCA's, because I think that really promotes a dialogue between people in the trenches on the ground trying to build solutions and the regulators, and so there's an understanding. And Sherman & Sterling has published a global map of regulatory sandboxes for fintech around the world, so I would encourage you to go click around. They all work differently, but the point is that they promote engagement between business and between regulators, so that I don't think we're going to achieve harmonization, unfortunately probably in my lifetime, maybe I'm wrong, but we can certainly work on certainty. We can work on the regulators understanding the business needs and the problems that fintech companies and crypto are trying to solve. And so I would just encourage people to keep up the dialogue and the good work.
And in the US, what are the particular challenges that your clients are facing to get this off the ground?
So in the US, we have a similar challenge, is something a security or not?
Yeah.
We are trying to fit it into our existing regulatory framework, but I will say that it's quite elastic, right? The test we use, which is the Howey test, goes back to the 1940s and dealt with oranges and orange groves.
Yeah.
So now we're looking at digital assets and trying to fit that into that rubric. But between, in the intervening, 70 or so years, there's been a number of developments. So I think that the U.S., one of the beauties of the U.S. framework is that it is very elastic and that it can be stretched to accommodate new technologies. So that's a big one, which is something a security token or not. And then custody is the other thing that my clients are really bumping up against, because we touched a little bit about institutionalization of the crypto asset market. And until we can sort out custody, that's a huge barrier to that market growing.
And Ben, coming to you, I mean, you've helped some firms navigate the UK landscape. I mean, any insight into the kind of practical challenges that you've seen your clients tackle?
Yeah, definitely. I think first observation, and we'll see this, we get very different people in the space. You get people that are mature financial service professionals, they're used to regulation, they know what's coming their way, and they can play the game. And you get people that are, in the nicest sense, literally just out of school and very, very bright, but do not understand the challenges coming their way. So I think that's the kind of headline piece is just get real. And then it's to be regulated or not. So with the current situation, you could, very often people want to be authorised. It's one of the ironic things. You could have some regulatory capital, more resources. It takes time. Yeah, I want it because it's going to give credence to my business. So you need to make that decision. Will I design a business model that's going to take me inside or outside of regulation? And from that, there's this kind of, okay, what are the resources I need? How long is it going to take? Do I need to go and raise more funds? Will it take me longer to get profitable? All those types of things. It is not rare at all that people think retrospectively and discover they've designed a business model that does not work once it's regulated. There's all those types of issues, which I'm guessing you must see on a reasonably regular basis as well.
Brilliant. And just staying with you, Ben, so if there's one thing that you'd like to see from a regulatory perspective that would help support the crypto sector, what would it be?
Do it now. So I don't buy we must wait for internationalisation and harmonisation. I think it would be great. I'm not saying don't work with our international partners. Of course we should. But I'm concerned that we are not acting now because we are waiting for international consensus. As we just heard, that doesn't really work. You look at what gave the UK such an advantage. So for the last 10 years, my phone's been hot with people from every corner of the planet phoning us up saying, we want to be here. What gave us that advantage? Well, it's because we moved first. Look at the sandbox. Look at the Financial Services Markets Act that's gold-plated, really an awful lot of what came after in Europe. So for me, move now.
Move now as in regulate now?
Regulate now.
Regulate all crypto assets?
Have a little think about it, but I think you can get 80% of the way there.
I think that's the crux of the regulator's issue, isn't it?
No, we've had several years. Well, not you. The legislation's had several years. That would be my point. Yeah.
Anna, probably, I suppose, a kind of more global view from you. I mean, what needs to happen in the regulatory community to help support crypto assets or to regulate it better?
Yeah, I mean, I think there's two ends of it actually that we work to. One is the industry really do need to. Yes, I mean there's a lot of fragmentation. That's part of innovation. It's not a bad thing, in and of itself. But there needs to be kind of an upskilling and an improvement in standards, and that doesn't purely come from regulation. It has to come from the industry itself and helping itself out on that. And there are some really scary numbers when it comes to things like fraud and scams, in this market, and that does need to be tackled by the industry. I think on a global level, yeah, I mean, look, by the time we harmonise the standards, none of this stuff will exist in the form that it does at the moment. So that's probably not necessarily a feasible plan, but I know we've spoken about the global sandbox in the conference, and that really is a place where regulators can come together and problem share in quite a practical way. Will it lead to harmonisation the next day? No, it won't, but it will actually allow us to have a kind of common understanding of what the problems are. And we might decide to take a different approach, and frankly, that might be the right thing to do. when it comes to the consumer offering. I think when it comes to the capital market side, you know, IOSCO and FSB are going to be important. But what I like about the global sandbox idea is that actually they can feed in the practical element of learning into these standard setters. So it's not just policy made in a vacuum. It's actually based on real business models and real problems that regulators are facing today. So I think there's something we can do more practically as regulators on a global level, but there's definitely something the industry can do as well. And I'll let everyone else tell me what the regulators should be doing.
Conscious of the clock, in one sentence, Dan, what can the regulators do to help support crypto assets?
Well, obviously, if we provide certainty beyond the bare minimum of the regulatory framework to go beyond that, again, I'm looking at payments type regulation, we can unlock much, many more use cases for consumers, lower the cost of remittances, and bring in institutions into this space and move beyond simply speculation. So I think look at it not just as something separate, but which can be additive to the financial system and create many more use cases beyond just payments.
Excellent. Donna?
So I think it's the themes that we've touched on this afternoon, right, which is regulatory certainty, guidance, right? And I would encourage the regulators to understand, again, and engage with the industry to understand the importance of the problems that these technologies are trying to solve.
And from your part of the world?
Exactly, because the crypto market develops so fast, the pace is so fast, it's very important for regulators to keep close dialogues with the industry so as to understand more how the business is doing, what they are doing, and then we will try to see how the regulation applies. If the existing regulation can apply, but some ambiguity there, as regulators, I think we should issue more guidance, clarify, so as to make sure there will be some regulatory certainty there. And if not, if we really have to create a framework for this, then be more creative and pragmatic as well.
Brilliant, thank you. It's interesting, in my 17 years of working with regulation, it's the first time I've heard this consensus to have more regulation fast and now. So FinTech's leading the charge there too. But if you could put your hands together for the panel for sharing their views. Thank you very much.